I've lost over $20,000 in one day trading 0 DTEs. And the craziest part, I was up $7,000. So here's 5 truths about trading 0 DTEs that would have saved me that they didn't even tell you about. And I can promise you the last one, oh, that's killing you if all you do is trade 0 DTEs and it's blowing your portfolios. I've been trading options for close to 10 years now. And in the entire process, I probably lost about $100,000. And while I've been trying to figure it out, and even to today, I'm still figuring it out, the worst day on record for me was the Tesla blow up, the infamous $20,000 day. And it wasn't even a rookie mistake. It was these 5 truths I'm about to tell you all that were hitting me all at the same time. Truth number 1, being right doesn't correlate to being profitable. You can be 100% right and where the price action is going to be going, where the stock's going to be moving, and still lose all your money with 0 DTEs. And this is the trap that actually gets most of you beginners caught up. You called the direction, the chart did exactly what you wanted it to do, but you open up your portfolio, look at your brokerage account, and the P&L is red. And I know you're going to be sitting there thinking to yourself, how the hell is that even possible? Because with 0 DTEs, you're not just trading direction, you're trading direction, time, speed, volatility, all simultaneously, all at the same time. If price is still moving your way, even if it's slowly, theta's still going to win. If IV gets crushed after the move has happened, guess who wins? Not you, the IV, and the worst mistake of all with the 0 DTEs, if you entered them late, the premium decay, it already ate up your edge before you even entered the move. Want an example? Look at AMD. AMD just had a killer earnings report. They crushed it. But what happened that second day? First day, it gapped up, right? Everybody saw the gap up. Most people would have wished they were in on AMD. But that second day, what happened? The stock gapped down hard, almost went back to $400. And guess what? Oh, there's so many people. I had people online calling me an idiot because they thought, oh, it's time to grab puts. Oh, it's over for AMD. It's topped out. They bought the 0 DT puts right at the open, thinking it was going to be easy money. But guess what? That IV surely got crushed. The premiums, they dropped 30% before AMD even had another move, before it even made any more lows. And even worse than that, if they were still hoping and praying that 0 DTEs would have paid out, AMT went back to opening price. So what? You got in 0 DTEs just to break even on the actual stock trade and lose money on your actual options contracts? Strange way to lose money. So remember, on a 0 DTE, being right is not enough. I always tell my traders, you not only need to be right in terms of the direction, but you need to be right in terms of the timing. You can't enter and wait for the 0 DT all day. No, you need that move to happen right then, right there. Get in, get out. With 0 DTEs, if the price isn't moving aggressively in the direction that you need it to, right when you've entered, I would say within the first 15 minutes, if that price has not changed like you need it to, the trade's already failing and it's time for you to start planning your exit strategy. So let me tell you all this. Stop measuring your win rate on, oh, I called the direction. Nobody cares you called the direction if you're not profitable. Start measuring yourself by the P&L and also in terms of, did you actually get the right contracts? Do you get the right entry? And then that's when we can start talking. Truth number 2, the first 30 minutes will blow your account. The most expensive mistake you can make on 0 DTEs isn't a bad trade, it's the timing. Anybody who has traded, anybody who has been in the stock market, you all know that open, that first 30 minutes is loud, it's volatile, there's aggressive moves, swings here and there, IV going up, down, fluctuating crazy. The premiums look juicy, and I can promise you every guru on X, on IG, on YouTube, they're screaming, trade the open, trade the open. It is the best time to trade. Wrong. What they don't tell you is during the same 30 minutes, market makers, the whales, the people with the real money, they're just recalibrating. So while the IV is artificially inflated, when every other retail trader is buying and buying and buying and getting in, trying to scalp, trying to catch the early move, saying, oh, I had a 10-minute workday, oh, 5,000 in 5 minutes. What they also are not telling you is they're paying the highest premium during the day for the lowest quality of fills. Just ask them, look at those contracts, show the contracts that you bought. I promise you, it's going to start adding up. The math will math. So let's think about this, right? Here's an example. NVIDIA, they got earnings coming up on the 20th. And you know, after that blowout earnings from AMD, all eyes on Jensen Huang, all eyes on NVIDIA. Let's say NVIDIA reported their earnings and then they gapped down at the open. You know, just like me, everybody who's trying to trade NVIDIA that day is going to front run the continuation thinking, oh, it's gapped down, it's going to sell off, sell off, sell off. So what usually happens, market makers, they're going to fade that initial print. The IV is going to collapse drastically. And then after that first 5 minutes, the next 25, prices just going to chop between 1 to 2 levels, just chopping here, chopping there, up $1, down down a dollar, up 50 cents, down 49 cents. And look at it from this perspective. Every trader who bought those Nvidia puts, theoretically, of course, at 932 right out the open, or maybe they got filled even at 931, they're already down 20% by the time it's 950. And guess what? The price, it didn't do anything that they didn't predict. So most of the professional 0DTE traders, the ones who are real killers out there, they're not even going to trade the first 30 minutes. They need the price to set up. They need the price to confirm. They need to get confirmation on the direction of the stocks they're looking at. They let the IV settle, and then they're usually going to take their first trade between 10 to 11 a.m. EST, that is. And once the market has shown a tan and the gamma profile is clear, that's when they execute. That's when they enter. That's when they time the best trades for 0DTEs. And remember, you don't have to trade every minute that the market is open. You should just keep in mind, the fact that you can doesn't always mean that you should. Always look for the high probability setups. And especially with 0DTEs, you should only be looking for high probability setups. And quick thing, if you're not a profitable trader, if you trade 0DTEs but have had no success, well, come over to Cobb's Capital. We're gonna help you out. Every day we have live trading. Every week we're having trading workshops. We have everything you need to be a profitable trader and scale your account from where it is to where it needs to be. Real trades, real exits, live trading, and the best part about it is we're never gonna leave you stranded. So if you're ready to be profitable, if you're ready to come make some money, go check out the link in the description. And this next truth coming up, this is why you keep almost being profitable. Truth number 3, you're buying the wrong strikes. If you're buying at the money or out the money, 0DTEs, you're just playing offense, no defense, and you're paying maximum price for maximum risk. A lot of you beginners who are learning to trade 0DTEs or researching up on 0DTEs, you're hearing it from the gurus. Oh, well, you gotta buy the at the monies because that's where the gamma value is the best. So SPY right there at the money, they buy the $5 call, it's at the money, and they think they're being smart about it. And then the price of SPY does move in the direction, so they notice, oh, my contracts, they jumped from $5. Now I got $7. And of course, $7, $2 gain that quick. Of course, it's never enough. So what do? They hold for more. IV crushes, and just 20 minutes later, they've gone from $7 all the way down to $3. Remember that at the money strikes not only have the highest premium, they have the highest theta decay rate. And with the at the money 0DTEs, you're gonna be paying double, if not triple in premium for something that should be regularly priced in. And on top of that, you're going to be losing 20, if not 30% in terms of theta decay that you're paying every 15 minutes without an underlying move even happening, with the stock sitting still. If you want an example, let's look at Tesla. Right? Let's say you buy an options contract for 5.00, so that would be $500 for the at the money 0DTE. Could be a call, could be a put, doesn't really matter. Tesla, and you know how it moves. Let's say it moves $2 in the direction that you need it to, upward or downward. That same $500 contract has now jumped not just from 5 to 6, but now 5 to 700. Remember, these are 0DTEs. You pay good money for it, so you're gonna get some good money out of it. But remember that extrinsic value, oh, it's gonna be bleeding. Like I said, at least 20, 30%. Sometimes it's not even a percentage wise. $30 every 15 minutes. Remember, them 15 minutes keep on hitting and hitting and hitting. By the time you decide to take profits, because again, oh, that quick money, that fast money, it wasn't enough for you. By the time you decided to take profits, it's gone back again from 7.00, that $700 range, back down to 550. So now you just made a $50 profit and the theta decay ate up all the rest of it. You were right by $2 and still barely made enough money when you could have been right and out of the contract to begin with. Now, compare this with deep in the money calls or puts, just deep in the money strikes. You might be paying more in terms of the intrinsic value on the actual strikes, on the actual contracts, but way less on the extrinsic value. So that same $2 move that saw Tesla move from 5 to 700 and then back down to 550, that probably would have been a 60% gains on deep in the money or just in the money contracts on Tesla. And that's not the only name. You can look and confirm that with every other name when you're looking at the 0DTEs. So speaking on the strikes, the professional play on 0DTEs is just to buy deeper in the money. These strikes, they give more with their delta values and they have way less extrinsic value and far less data exposure. So when Tesla gets to chopping, or let's just say the market, we know the Trump markets, you know what's been going on with Iran, you know everything going on. When the market gets to chopping, when the market gets volatile, the theta decay will not be eating up the in the money contracts like they do with the at the money 0DTEs, or even worse, the out of the monies. And yes, I do know in the monies cost more, but at least at the end of the day, you can be more profitable or have a higher probability of being profitable. And after all, whether you're trading zero DTEs, you're trading weeklies, monthlies, leaps, might not matter. At the end of the day, every options trader is fighting against theta decay, and none of us want to have to deal with it. And if you can't afford the deeper in the money contracts, it's not a strategy problem, you just have a position sizing problem. And this leads us into truth number 4. Your exit strategy, it was built for weeklies, not zero DTEs. All the rules that you learned from the how-to videos on options trading on YouTube, on IG, on X, whatever it might have been, those same videos, that same advice, it's only gonna do one thing, and that's blow up your portfolio. Think about it this way. Most of these videos, most of the rules, they're gonna give you standard information, standard rules to live by while you're a trader, right? Collect your profits at 50%, cut your losses at 25%. Let your winners run, let them make the 100%, 200%, 1000% gains that everybody loves to post, that everybody loves to see. And yes, these are solid rules. When you're buying monthlies, when you're buying weeklies, this zero DTE game is a completely different beast. This is not something that you apply to trading to zero DTEs. On a zero DTE, a winner can become a loser in 90 seconds, literally 3 minutes, and you're out of the game. A 30% gain by 10:15 could be a 60% loss by 10:45. And remember, it doesn't really matter if we're talking about options or investing because the percentage rules always apply and the math is always mathing when it comes to these numbers. For zero DTEs, or any options for that matter, but we're talking about the zero DTEs right now. If you make a 50% loss, you don't need 50% to get back to break even. You need a 100% gain just to get back to break even, and then you need more to profit. So tell yourself or ask yourself, do you think you really have enough time to stomach that type of a loss and have enough time to get back into profit on zero DTEs if you're trading them like the weeklies, like the monthlies, like the leaps? And letting winners run, that's one of the fastest ways to give up all profits on what could have been a perfect setup, perfect entry, and perfect exit. And I'm gonna give you guys a personal story. 5 years ago, this actually happened to me trading Tesla. You could not stop me and slow me down when I was trading my zero DTEs. It was a Friday. Which Friday, I don't remember exactly, but I think it was Q1, Q2. Tesla was booming back then. I still trade Tesla every day now, but still, back then, different type of frame. I was using Robinhood, and you all know how it is with Robinhood. You might not get filled right away, so I don't think it was right at the open. It might have been 3 minutes to 5 minutes right after, so it wasn't right at 9:31. And as soon as I got in, I promise you all, about 30 seconds to maybe a minute later, I promise that P&L went positive. I was up $7,000. And these were zero DTE puts. And I was like, bro, thinking to myself, there's no way. If I made 7,000 this quick, I can't make 14, I can't make 21, 28. What can happen? Whoa, this is going to be a monster day for me. The setup was perfect, the direction was right, the size was on, and the price was breaking down. I thought I had all the confluence in the world to stay in these zero DTEs. And the rule I had internalized to yourself from all the videos I've watched, probably just like you, when you get into a winning trade like that, you let it run. You don't let that go without you staying in the trade, because that is going to be the game changer. So me being the smart guy I thought I was, I let those winners run. They ran. They ran right all over me. Tesla rallied off lows, and within minutes, I'm not talking about hours and I could have gotten out early. We're talking within minutes, and I could have been out already. Tesla rallied. I went from being up 7,000 to being back to break even. And then guess what? I still stayed in because I thought, maybe we just rebounded real quick before the next leg down. I know you all have told yourself that lie before. It's taking a little bit of relief. It's profit taking. It's before the next move up or the next move down. It didn't go back down. And by the time I had stopped convincing myself that the price would go back down, I was already down $20,000 on the day within the same period, one day minus 20K. And the worst part about it, it wasn't really a discipline problem. That was really just me applying rules built for weeklies and monthlies to zero DTEs. I should have had my profits. I should have collected that money so fast, but I wanted to treat them like the contracts that they were not. And it cost me so much. In fact, that shit haunts me to today. I still think about it. I'm up, but you don't forget a type of loss like that. And that's the reason why I have rules now, especially like this truth number 4. Zero DTEs, they need time-based exits, not just percentage-based ones. After 11:30, you should be taking profits faster. After 2 p.m., you're not even looking to take new directional trades unless the setup is A+, A1. Actually, scratch that. Unless it's S tier. And within the last 30 minutes of trading, and I know the other fools are gonna say, but the last 30 minutes you could catch something. 9 times out of 10, it's not even worth trading. it's not even worth putting that risk and your money on the line. Your exit plan should be a clock. Once you hit your profit and you've hit it within a certain time period, go ahead and collect on the 0 DTEs. There's always other trades to make, because I could tell you, if I was operating on the clock where I thought, oh, I should take my money now, I should be leaving now, I would be up $7,000 from that past time, and I probably will be in a different position. But hey, at least I have the 20K story to tell, and I hope you all can learn from that too, because on 0 DTEs, you should collect your money as fast as you get it, because they are unforgiving. Truth number 5, when you're inexperienced and you're trading 0 DTEs, they're not trades, they're bets. These first 4 truths are all going to point to one thing that all the fools are not going to say out loud, is that when you're inexperienced, these 0 DTEs are not trades, they're just bets. A trade, that's a position that you enter into with your hard-earned money, of course, but hey, the risk to reward ratio, it pans out for you. And you take that trade based on the edge that you've developed, and that should pan out over time. And a bet is position that requires the exact thing that you predicted to happen in the exact window that you predicted it in. Again, as is the case with 0 DTEs, you don't need to just be right, you need to be right in terms of the direction as well. And you need that direction, you need that price movement as soon as you enter, not later. You need it now when you enter. If you entered at 10:30, if you entered at 9:30, and let's say the move comes at 1 p.m., 2 p.m., you lost. You don't even need to show me. I know, you lost. If you enter at 2 p.m., but the move comes at 2:59 p.m., you still lost. If you enter into that trade at 12 p.m. and that move happens at 3 p.m., you lost. Your money's gone, evaporated. Oof. And again, for those of you who are inexperienced, you keep on trading these thinking that you're trading, but again, you're just gambling. You're throwing darts at a board, you're playing roulette, and you're hoping that your number's going to come up. And I'll do you all one better. If you don't believe me, watch this. I'll pull it up for you all. Look on any Furu's page, whether that's X, IG, YouTube, TikTok, it doesn't matter. And all the ones that are trading 0 DTEs, I'm not talking about the others, the 0 DTE ones in specific. Count the number of contracts, because when you pull up that number of contracts, it's almost always going to be one contract that they have. Why? Because they know 0 DTEs are coin flips. They know that they can get the beginners, they can get them into their groups, they can get them to subscribe, to buy their course, to do their mentorship. If they say, oh, I made 4,000% off of Tesla, I made 500% off of AMD. Oh, you beginners, y'all eat that up. But keep in mind, why are they only posting one contract? If you were such a great trader, if you had conviction in the trade, you should have multiple contracts, or no? You should understand, well, as options traders, we know that our type of trading, our style of trading, we're just using the leverage to make exponential gains. So why would only one contract be in your account, in your brokerage, into the trade? And that's what you guys are not being told about the 0 DTEs in the first place. And most of them, they're not just trading that one. Oh, they probably have 10, 15, 20 open trades, but all the losers, they're not going to show that. But that winner, that 500%, that 1,000% gainer, oh, that's going up on the feed, the highlight reel, the story, everything you need. And really, the fact that they're just showing you the one contract 0 DTE with the high percentage gains, that's not even something to aspire to. That's not even something to look forward to. Honestly, from someone who's a professional trader like me, that's just a confession. It's telling you all they don't have an edge, they don't know what's going on, and they definitely don't have the money to size up. Remember, real traders, we don't need lottery tickets. You can set away some money to the side, away from your main trading account, and you can play 0 DTEs with it. There is no problem with that, especially for you inexperienced traders. You can set aside 10, 20, maybe even $50 just to throw away on the 0 DTE, but just call it what it is. It's gambling. When you're trading 0 DTEs, which again, they're not going to tell you either, you have to be okay with losing 100% of the money that you put into that trade. And if you want to actually trade a setup with the edge, trade a setup with some time. Longer dated options, defined risk spreads, position sizing that's not going to ruin your win streak. The path to scaling up with options trading, the path to making real wealth with options trading isn't trading 0 DTEs. It's grinding it out, taking the same repetitive setups, making the boring money, but the fast money off trades where you don't need everything to align, the stars to align, the horoscope to tell you that, oh, everything's going to be fine within the next 10 to 15 minutes. And really, that's just the difference between a trader and a gambler with good lighting. If you take one thing from this video, take it from someone with a decade of experience in the stock market. The market, it doesn't care what you invest into, it doesn't care what you trade, it doesn't care about you. The market is ruthless and cold-hearted. At the end of the day, if you want to make real money with trading, stop betting. Stop the betting. Trade the real setups, buy yourself some time, be smart about it. That's all I ask of you all. And if you made it this far in the video, you're already putting yourself ahead of 90% of the other traders, and especially those trading 0 DTEs, because they don't want to even hear these truths, let alone act on them. And here's what I challenge each and every one of you watching this video to do. Take the one truth that you found the most helpful, the one that made you say, yeah, that's literally what I'm doing wrong, and fix that one thing this week. Not all 5, just that one. And then work on the next, and watch how it compounds and watch how it helps your portfolio and helps you to become a better trader. And if you want to watch real 0 DTE trades broken down with these same principles and understanding exactly how they move, exactly how they work, then I'm going to show you all in the next video exactly how you're going to need to trade, exactly what you need to know, and exactly how you're going to need to make the entries and the exits for maximum profitability. So if you all enjoyed the video, go ahead and make sure you all leave me a like. If you want to come join Cops Capital and learn from me and learn from us, our killers, go ahead and subscribe. I'll leave the link in the description. And for my next videos, for my next content, just turn that notification bell on. I'll be back real soon. I'll catch you all later.